Hi everyone, this is Mrs. V. Chen. Welcome to my Form 5 Accounting lesson number 12. Today is 19th March 2020. Alright, so we will do another DSE question about dissolution. Okay, so this is the question, and then let's take a look at the things that we have to do. So we have to draw up realization accounts, and then we have to draw up capital accounts here. Alright, so therefore I have my realization accounts and then my capital accounts. And even though it is not required to do any cash at bank accounts, but I want to draw up that to do some experiments to see whether I can close everything in the books of the partnership. Okay, so we follow the procedure for dissolution step by step. So here we have the capital accounts, so that we simply close this capital accounts here. So as balance brought down to begin with. All right. Okay, and then next we have to close and transfer all the assets into the realization account. So therefore I need to close this office equipment, inventory, trade receivable. Okay, to close it, so it should be recorded on the debit side of the realization account, so that I put 465,000, 83,000 and 62,000 for all these three things. Okay, and the last one is trade receivable, like that. Okay, so this is step number one. So after that, we have no more. There's office equipment, inventory, and trade receivable. All right, so we don't close cash at bank, because cash at bank, so we will have another cash at bank separately here. So here is my cash at bank. So to begin with, I put 4,000, and this is balance brought down to begin with, right? Okay, and then therefore after that I have no more cash at bank, so therefore I have two liabilities left that we don't need to close to anywhere at the moment. Okay, so next we look at point number one here. So we have Ron took over the office equipment at 50% of the net book value. So what is a double entry? So this is the double entry. So therefore we have to charge Ron by debiting his capital accounts. And then we credit realization because we already have the office equipment transferred to the realization accounts. All right, and this is the net book value, and then charge Ron by 50%. So after this double entry, I do my posting. Okay, so the posting is here. So I have to debit Ron, so which is 232,500. Okay, the description is realization account. So for taking away office equipment. Okay, and then I credit this realization account, and this is capital Ron. Okay, so point two is a bit complicated. So we have this: Tim took over all the inventory to settle 60% of his loan to the partnership. So we have this liability, which is loan from Tim. Okay, so how do we set off this? By using inventory. All right, but this is only 60%. So what about another 40%? So we have this: the partnership paid the outstanding loan balance by check. So, okay, this is the double entry. So anyway, we will have to settle this liability. So no more. So debit loan from team, which is 80%. So how do we settle that? So 60% using inventory. Since inventory already closed to the realization account, so we credit realization account instead of inventory. So which is 60%. So how much is 60%? 60% times 80,000. So that will be 48,000. Okay, so what about this 40%? Okay, according to the question, it says pay by check, so that the remaining is 32,000 paid by check. Now I come to posting. So therefore, debit loan from team. Okay, tick. That means we have no more loan. All right, and then I have to credit my realization account. So here is my realization account. So 48,000, and which is loan from team. Okay, and then I need to go to the bank accounts. On credit side, 32,000, which is also loan from team. Okay, and sometimes we have to put the steps and workings here. So which will be 80,000 times 60%. All right. Okay, next point number 3 is a little bit complicated as well. So here we have Ron was responsible for collecting all the trade receivable, and finally he collected 60,000 and deposited the amounts into the partner's cash bank account. Now look at the amount collected, which is 60,000, and if you compare this 60,000 with trade receivable 62,000, so what do you think about this 2,000? This 2,000 can be bad debts written off. This 2,000 can be discount allowed. So do we have any double entry for that? Actually, we don't need to do anything related to this 2,000 because the final loss will be included in the gain or loss on realization later on when we close the realization accounts. So here is the double entry. So we debit bank because more money in the bank, which is 60,000, and then we credit realization 60,000 because trade receivable already close to realization is step number 1. Okay. And then we have another point which is new to us here. The partnership agreed to pay him a handling fee of 2% on the amount collected. So actually this is for compensation about the work done by Ron. So therefore, handling fees must be paid by the firm and earned by Ron. Okay, so here is the double entry. So debit realization because this is a kind of cost on realization, and then we compensate to Ron by crediting capital account for Ron, which is 1,200, 2% on the amount collected. All right, so after that, I simply do posting. So debit bank. So here is my cash bank accounts. So I put 60,000 here because of realization. Right, step by step posting. And then credit realization. So therefore I have 60,000 here, and because this is cash at bank for the amount collected from trade receivable, and then here debit realization for the expenses handling fee, and then the description is capital Ron. Okay, what for? For handling fee. Right, so you can see debit side of realization, we have negative, the costs and revenue on credit side. Okay, and then I have to credit capital Ron. So Ron is here 1,200, and the description is realization accounts because of this handling fee. All right. Next, point 4. Partnership received a 2.4% discount on trade payables, and which were settled by team on behalf of the partnership. All right, so look at this. What's left? Trade payable being the last thing left in the statement of financial position. So how do we close that? We close that by paying money. So that after that, I have to debit trade payable. So we have no more trade payable. So here, we debit trade payable. And then who's paying money? Not using the partnership's money, but using team's money. So we have to compensate this to team by crediting team's capital accounts, but only 97.6%, because according to the information, we pay less to settle this trade payable, and there is 2.4%. So what do you think about this 2.4%? Must be discounts received, so that the related account will be in the realization account for discount received. All right, so if I use calculator, so that would be 201,000 times 0.24. So this 4,824 as a kind of discount received in the realization account. So minus this, so I have 196,176. Okay, so this is a double entry. Now I do my posting, debit trade payable here, no more trade payable, actually all things closed here. Okay, and credit capital team to compensate team. So team is here. So to compensate team, I have 196,176, and the description is trade payable. All right, and then I also have credit realization accounts. The revenue is trade payable because of discounts received like that. Okay, so point 5 is very straightforward, so we can skip double entry and do posting. So realization expenses were paid by checks. So on debit side, we have all the costs and realization expenses, which is 3,800. Because paid by check, the description, because of cash at bank account, the description is realization expenses. Okay, so debit realization, and then credit cash at bank. So here is my cash at bank, which is 3,800, and then I have realization expenses like that. Okay, so point number 6 is new to us. So we have this: Sam was unable to settle his accounts. Why? Because here, Sam was declared bankrupt. And at the same time, we have the word here, deficiency. Deficiency means not enough. Okay, so obviously that means what happened to Sam? Sam must have a negative balance in his capital accounts, and which is also the debit balance. All right. So to settle that, we credit capital Sam because all things must be closed. So under the normal situation, Sam should pay the firm money and we should receive money. But however, since Sam was declared bankrupt, so therefore the bad thing will be borne by Ron and team by charging this remaining partner's capital account using the profit and loss ratio. Okay, but the point is, how much will be the debit balance in the Sam's capital accounts? We don't know at this moment. Therefore, we have to look at the things left. So here we have realization account, and this is always the first account to be closed. Okay, so to close realization account here, you realize that this time we have debit side bigger than credit side, and debit side is negative, and then we need to insert this much if you use your calculator. So that would be a loss on realization shared by 3 of them. So how much would that be? So 269,676 divided by 6. So I have this 44,946 if you use your calculator. And how much here? 89,892. And for team, it would be 134,838. So realization account will be always the first account to be closed. So this loss on realization, okay, is a bad news to partners. So I'm going to debit partners capital account. So 44,946, and Sam has 89,892, and team has 134,838, and this is about loss on realization. Okay, like that. Okay, so after we have closed the realization account, and then we work out loss on realization, and then the first account to be closed will be Sam here. Why Sam? Because this is a debit side bigger than credit side. Therefore, you can see this is a deficiency. So this is how we get the figure for Sam here. So which will be the closing balance in Sam's capital account. So therefore, I have this 59,892. To get this, we need to refer to the capital account. So therefore, however, since Sam has no money to pay to us, this will be a very bad thing to the other 2 partners to share this loss. So it will be 59 892 divided by 4. So Ron will share this 14,973 and times 3. So Tim will share 44,919. Okay, so therefore I can share this by debiting the other two partners. Okay, Ron 14,973 and Tim share this 44,919. Okay, so who's capital? So this is Sam's capital for the deficiency. So debits Ron and Tim. Okay, and credit this Sam's capital by the other two. So that would be Ron and Tim's capital to share the deficiency, DEFICIENCY. Okay, so to complete this double entry, we need to refer to the balancing figure in the capital accounts for Sam. Okay, so next we do the normal procedure for Ron and Tim. Now here for Ron, so Ron, debit side is bigger than credit side, so we insert this. Okay, so we say that Ron has a debit balance. Okay, so debit balance is also negative to Ron, so therefore Ron has to pay money. So the firm receive money, so debit bank here and credit capital for Ron. Okay, so this also will be the balancing figure. If you use your calculator, so this will be 178,919. Okay. Okay, now we look at the column for Tim here. So Tim has a credit side, which is bigger than debit side. So therefore, I insert this on smaller side and saying that Tim has a credit balance. And this credit balance is positive to Tim. So therefore, the firm has to pay money to Tim and then to settle the credit balance. So that this is a double entry, debit capital and credit bank. So this is the balancing figure if you use your calculator. All right, so finally, I'm going to post this 207,119 to my Cash App bank account. So this capital is 207,119. So this is for Tim. Okay, so we pay money to Tim because Tim has a credit balance which is positive. Okay, and here Ron, how about Ron? We have to receive money from Ron. So here debit bank. So how much is it? 178,000, which is 919, and this is for Ron, like that. Okay, so finally, let's check. If we have the same total on debit side and credit side in the Cash App bank accounts, that means congratulations, we have no mistake, and then we have closed everything in the books of the partnership. Okay, so use your calculator. Let's see whether we can make it or not. If you add up the total on debit side and credit side, so exactly the same, so that we have nothing left, and then we have closed everything in the statement of financial position as well. Okay, so this is about dissolution of partnership. And once again, in this question, even though this is not required to draw up Cash App bank accounts, very often we can draw up that when we have time to prove it, whether we can close everything for double checking like that. Okay, so this is all about dissolution. So thank you for watching my video. I see you next time. Bye bye.